Hey guys, how are we doing? Hello? Can you please put a plus or something like that you can hear me? Okay, great. Some kind of strange sounds in my speakers. All right. Okay, today we're going to cover a very interesting topic about medical supply industry. Like it's called non-invasive, but the similarity of businesses invasive or non-invasive, it's very, very similar. Just a second. Hello? Hello. Okay, so let's start from the beginning. Now, first disclaimer, you need to remember that this masterclass is educational purpose only. And even though we discussed the real company and you can go and invest in this company after that, you have to make your investment decision yourself, and you have to take into consideration your own circumstances, financial circumstances. You have to know how to diversify your portfolio, risk management, etc., etc., etc. Okay, guys, please put pluses that you understand that theme. Okay. Okay, fantastic. All right, so what kind of plan for tonight? We're going to look at current market situation. Then we're going to look at pros and cons of investing in medical supply industry specifically. Then we're going to analyze McKesson Corporation, Corporation, ticker is MCK. And then we'll look at different possible trading or investing strategies. And then a couple news about our academy, what we are going to do in the nearest future. All right. Now, Dow Jones Industrial Average. So first of all, every time when you plan to invest in the stock market, you have to take into consideration where market is right now at this particular moment. So if we're going to look at this trend, which we can see was uptrend from 2009, and from 2016, it's started kind of moving up much faster, and it's broke the trend which was lasting for nearly a decade. And at the moment we are right at a resistance level. So if you see this fast line from 2016, we can see that right now we're exactly at resistance level. So remember that whatever goes up eventually has a pullback. So we can expect it right now. If we're going to look at the smaller duration, we can see that in January we had this pullback in February, end of January, February, from 26,750 to 23,000, something like 800. And since that, we kind of in horizontal trend, even in horizontal trend, but what we can see that from April, from end of March, we can see like it's uptrend. So the rolls getting, each high gets higher. And right now, we practically at this resistance level here as well. Also, we can see that this high was already in the end of February on the same level. So when traders, technical traders, they look at this type of information, they can expect it slows down here, it will be testing these levels, and if it breaks through, then the next level of resistance would be the highest point in January 2018. If it holds this level, so quite easily we can have a pullback at least to 25,000 or even lower to 24,500. So please pay attention to these levels right now, and especially if you decide if you're deciding to invest in some kind of long share, so buying for long, it's much better to enter a position when the market pulls back as well, because quite often if you look at the market last Wednesday, you would notice that everything was going down, and then on Thursday and Friday it started moving up again. So it was quite a significant drop. We see this candle right here, and you could buy everything is like 2% probably cheaper at that particular moment. So it was a pretty good entry point. So that's about Dow Jones. If we're going to look at S&P 500, very similar situation. The only difference is that the highest point right now is close to the highest point which was in January. Okay, so we're approaching this level. So this level is going to be much stronger. So, and definitely pay attention to this, because at least we can have to pull back here a couple percentage, and definitely you can enter a long position at much cheaper prices. Again, that would be level even if the trend continues to be uptrend. Okay, so something like that. Now, also we see that Dow Jones, that point for Dow Jones was the highest point. We're somewhere here in Dow Jones, and you can see that S&P 500 moved higher. So, and of course, pay attention to the companies. If you choose the company included in that index, and you're buying something like that, so pay attention to that as well. Now, COMPQX is different from Nasdaq, different from previous two indexes, because it actually makes highest high. So in March it was a higher point. It was higher than in February. Then it was even higher in June. Then it was higher in July. And at the moment it's forming a triangle. So we can see that like in the early August, the highest point was lower than the highest point in July. But at the same time, the lower point was higher than the lower point previously. So it's like a triangle forming. So, and remember that at this specific point, the move might happen up or down, and usually it's equal to the this area, so to the size of the triangle. Okay, so and that would be around 200 points here. So we can expect that 200 goes up. In this case, it will achieve the resistance level of this uptrend, or it could be 200 points down. In this case, it will reach this level, which was in end of June. So kind of pay attention to what. And you probably understand, you know that during last couple of weeks, few companies included in like in tech stocks, Nasdaq, they had a big drop, and probably the prices of those companies, they keep this index down. But if you look at generally at three indexes, Nasdaq, Nasdaq, S&P 500, and Dow Jones, you'll notice that COMPQX is kind of at higher valuation levels, because COMPQX PE ratio is 2 points probably more, 2% more, like 2 points more than other indexes. So if when I looked PE of S&P 500 was around 24, Nasdaq was already 26. So people pay for tech companies more in general, because they expect that they will grow faster in the future. Okay, but please pay attention to this type of situation. Now, and of course, if we look at volatility index, index of fear, I'd say like that, so we can see that VIX is high when indexes are low. So this point was end of January, sorry, when the market went down. So that was like in February, early February. So this level was the best to enter different positions for long, I mean. And when the market goes up, VIX going down. And if you can see that when the fear is high, VIX is high as well. And when the fear goes down, VIX is getting lower and lower. And when fear is lowest at the lowest point, that's the worst situation to enter a market, because people are not afraid. People buying practically everything, indexes are high, share prices are high, and of course that's the point of maximum risk, because everything is overvalued. So it would be very difficult to find something what undervalued at that specific moment. So, and we can see that we just previously saw that all indexes, they're right now at resistance levels, and we can see that VIX is kind of at a low level as well. So for the last couple of months, it was something like around 11. It will get 11. So pay attention to that. So try not to buy shares when index VIX is low. Try to get into positions when VIX at least somewhere at the level of resistance. The best time probably when it goes here or even there, okay, something like that. Now that's about current market overview. Guys, do you have any questions regarding that? And remember that we analyze it not because we follow and we trade indexes like personally in our club. We pay attention in order to evaluate our entry points and exit points. So we know that if we are planning to enter the position, for example, tonight we're going to cover the company, and we're thinking, okay, fine, should we wait and buy it a bit later, or should we buy it right away? And when you look at like general market overview, understand that market might pull back a couple percent. So remember that your company might go down as well. So, and it will give you better opportunities to enter the market. Okay, guys, put pluses if everything is clear about indexes, and then we'll go further. Okay,